So next we're going to determine income tax. Now that we know how much of your income is taxable, we actually have to figure out what the tax is going to be. So a tax table is used to determine how much you owe based on your taxable income. However, you do not have to pay this much if you're entitled to any tax credits. Now, a tax credit is sums of money that reduce the income's tax owed by the full dollar for dollar amount for the credit. So at the end, once you have your income tax that you're supposed to pay, if you have like $300 in tax credits, then you can just straight subtract that right at the end, dollar for dollar. So the steps to calculate federal income tax: follow the process and round all amounts to the nearest dollar. Number 1, determine your adjusted gross income. We did this on the previous page. Adjusted gross income equals gross income minus adjustments. Step 2, determine your taxable income, which is taxable income equals adjusted gross income minus any exemption and deductions. Again, we did that on the previous page. So the third step is determine your income tax. So we are going to get the income tax by finding the tax computation and then minusing any tax credits after that. Now, this table shows the 2016 tax rates, standard deductions, and exemptions for the 4 filing status categories below. The tax rates in the left column, called marginal tax rates, are assigned to various income ranges called margins. So over here we have the tax rate, okay? So for certain amounts of money, so let's say for the first $9,275, you're going to pay a tax rate on 10% on that amount. Any amount from $9,276 to $37,650, you're going to pay a rate of 15% on that amount, and so on and so forth, all the way up. Okay? Additionally, there's 4 different ways you can file. You can file as single, married, filing separately, married, filing jointly, and then head of household. So there's different ranges for each of those depending on how you're going to file your taxes. So all of these numbers are really important, and we're going to do some example problems using this tax table. So for our example here, we're going to use the 2016 marginal tax rates in the table above to calculate the federal tax owned by a single man with no dependents whose gross income adjustments, deductions, and credits are given as follows. This single man has a gross income of $40,000. He has a $1,000 of adjustment. Then he has some deductions here and no tax credits. Now there's more information that we're going to need to get from the table above. So let's take a look at that table right now. It says this is a single man with no dependents. Okay, so we are going to be filing as a single man here. Okay, so that's the column that we're going to be looking in. Step 1 is to determine the adjusted gross income. Now we're already given the gross income is $40,000, and to get the adjusted gross income, we're going to take the gross income, which is $40,000, minus any adjustments. In this case, he only has $1,000 for adjustments. I can subtract that, probably in my head here, that's just going to be $39,000, which is going to be the adjusted gross income. The next step that we did on the previous page is to find the taxable income. The taxable income, we're going to take the $39,000, starting with the adjusted, and then I'm going to subtract any exemptions or deductions. Now, looking up in the table, we have a standard exemption of $4,050 per person for the single man that we're doing his taxes for. So the $4,050 coming from the table is going to be right there, plus any exemptions. Now the exemptions are a little bit trickier because we have two types of exemptions. We have the standard exemption, which if you look in the table is 6,300, and the itemized, which we have here, the charitable contributions, he donated $3,000, $1,500 in theft loss, and $300 in tax prep, which you can take off in deductions. And we're going to add all of those up, and that just gets us 4,800. Now looking at these two, 4,800 and 6,300, which one looks like a better deduction to you? Well, the standard deduction looks a little bit better because it's higher. So you can't actually use the deductions if the standard is higher. So you can only use one of the two. So in this case, the standard is better. So I'm going to take out my calculator here. I've got 4050 plus 6,300. And that comes out to be 10,350. And I still have to take 39,000, subtract 1035, so we have 39,000 minus 10,350, and that gets the taxable income is 28,650. Okay, so step 3 is to determine the income tax. Now this is the newest step here. Now that we have the taxable income of 28,000, I need to break it up into groups. So part of my income, the first $9,275 are going to be taxed at a rate of 10%. But because my taxable income, 28,650, is higher than that, I also have more being taxed in the 15% category. Anything from 9,276 all the way up to 37,650 gets taxed at a 15% rate. But because my taxable income does not exceed 37,650, I don't have to go up to the next tax bracket or the next margin of 25% because I don't have any taxable income over 37,000. So to get the income tax, I'm going to compute my tax. So I have 10%, write 10% as a decimal, that's 0.10, times the first $9,275, plus the next income bracket is at 15%. So for the next amount of money, I have to pay 15% on that. So because 28,000 lies within that range, I need to find out how much I'm going to be taxed in there. I should have 28,650 subtract the 9,275 that I've already paid. I've already paid that in my first 10%, so I only need to do the margin on the secondary margin. Now, if I had any tax credits, which in this case I have none, I would then subtract them at the end, but I don't have any, so I'm subtracting them. So I have 10% times 9,275 plus 15%, that's 0.15, times, let's find out how much this is. I got 28,650 minus 9,275, and that turns out to be 19,375, and then I probably don't need to put minus 0. So I'm going to multiply this out. 0.10 times 9,275. That's going to be 927.50 plus 0.15 times 19,375, which is 2,906.25. So now I can add those two together. Because that's already in there, I can just hit plus 927.50, and that gets me $3,833.75, which is the income tax that is due for this single man filing by himself with the gross income adjustments, deductions, and tax credit listed. Now, one thing to note is if you take the amount that you were taxed in the 10% category and add the amount that you taxed in the 15% category, those two numbers should add up to the entire taxable income. So if you're trying to check your work and make sure that you subtracted off the right thing, if you take 9,275 and add 19,375 to that, it should equal the 28,650, which it does. So when you're breaking them up into the tax brackets, you're only taxing the range for each of the percentages. And so if you add up all of those values, you should get your taxable income.